This is Chris DiLorenzo with CMD, your CPA and trusted advisor. Thanks for joining in today for today's topic of business entity selection. We're going to be spending some time talking about why form a business entity and what they are, common misconceptions that you may have heard about business entity selection, including a popular one I hear a lot where people say, I need to be an S corporation by default. So we're going to talk a little bit about that. We are also going to talk about when it does make sense to form a corporation or to be taxed as a corporation. And then, of course, we'll get into what happens if you made the wrong choice. First thing, let's get into, we're going to be talking about the business entity. So who here has not formed a business entity so far? So good, okay, well not good, but a couple of hands raising up, so good that we're going to talk a little bit about it.
You mean like an LLC?
Like an LLC, a partnership, or a corporation, something like that. So by default, when you start a business, if you're by yourself, you're a sole proprietor. By default, if you start a business and you have more than one owner in your business, you're a general partnership. Well, what comes with those types of things is potential liability if you guys were to ever get sued for whatever happened in your business. The liability goes beyond your business, and it goes all the way to anything you own personally, anything your spouse owns personally, right? Of course, there's other ways to protect it, but in general, as a general rule, if you're set up as a sole proprietor or as just a general partnership, you have no limited liability. So the reason you want to form a business entity such as an LLC or a corporation is that will give you the ability of that protection. So if you were to get sued for malpractice, for, hey, you're a realtor and there was wire fraud committed because a client sent the wire payment to somebody else because you guys sent the wiring instruction and you sent it wrong, or you guys got hacked, right? There's reasons why you want to make sure that you have a business entity, and that's just kind of one of them. So when you form a business entity, an LLC is the one type that you can have. You could be, in the state of Nevada where we're talking today, you can be a single member LLC, or you can be a multi-member LLC. You can also be, from a tax standpoint, you can elect to have tax treatment in that way as a corporation, either a C corporation or an S corporation. So what I want to talk about is a few of the common misconceptions that are out there as far as these different business entities go. So the first common misconception that I hear a lot is, well, I just have a small business. Maybe I'm just a realtor, right? And it's just me. I don't need to have a business entity. Well, just going back to what I was saying before, every business, in my opinion, should have some sort of liability protection. Just like if you think about it, right? So you guys have car insurance. You have homeowners insurance. Maybe you go and you buy an iPhone and you buy the Apple Care insurance, right? So an LLC or a corporation is really providing you with that level of insurance. In addition, in Nevada specifically, it's relatively inexpensive to form that type of business entity. So in general, all of your businesses require a state business license. Here in Nevada, that business license costs you $200. Well, if you were to file an LLC costs you about $450 for the first year, which includes that $200. So it's actually just a smaller incremental difference from what you're going to be paying. I see a few people nodding their head because I've talked to them before and they actually had to double pay that, because actually if you change from what you originally have, the Secretary of State of Nevada doesn't give you credit for it. So you actually would have to pay it twice in the first year, once the way you did it without the business entity, and then once when it comes along with the business entity. Next common misconception we're going to talk about is C corporations. So with the tax law changes that have happened, you guys may have heard that they've changed the corporate tax rate now to a flat 21%, whereas the highest individual tax rate, which would be relevant to sole proprietors, any pass-through types of entities, is 37%. So I've heard a lot of people say, well, now that the corporate rate is 21%, maybe that makes more sense for me to be a C corporation. And again, it's possible that it could be, but in general, I would caution people from going to be a C corporation. There's a lot of red tape that goes along with it versus being some type of an LLC. You have to have actually issue yourself shares of stock. You have to have annual meetings that you wouldn't otherwise normally have, right? And especially when it's just you, it'd be kind of silly for you to log a meeting. Hi, I sat down with myself and met with myself stamp, right? You probably don't want to do that. But bigger concern with that, right? So the U.S. tax bracket for individuals is graduated, right? So while the highest tax bracket is 37%, the lowest tax bracket is 10%, right? So it would take you probably until you're in almost if you're married, the $500,000 range where you're going to start seeing some benefit from being a C corporation than you would from any one of the other business entities. So if you're not in that bucket, C is probably not right for you. There are other reasons where it could be, but probably not if that's the bucket that you're in. Next thing, an S corporation. So I hear lots of people talking about this all the time, and they've heard an accountant, they've heard a friend, they've heard somebody say, I need to be an S corporation because I'm going to save a lot of money in taxes. In general, I'm going to tell you there is a big fallacy that comes along with that. And what comes along with that is this concept of having a reasonable compensation along with your salary. Along with your distributions you take as a corporation. So who here is familiar with self-employment tax? Well, great, about half the room or so. So for those of you that are not, when you're an employee of a business, so before today, presumably everybody here is a business owner, not necessarily an employee, when you would get paid, you would pay Social Security and Medicare tax, right? So the combination of that is 7.65%. What you may not have seen is that your company was matching that 7.65%, right? So the combined amount that's being paid is 15.3%. When you're self-employed, you pay both pieces of it, right? So you have a self-employment tax that's 15.3%. A lot of people shaking their heads with sad grins because of the extra taxes that they have to pay. So where people talk about S corporations being more beneficial is there's a way where you can avoid some of that self-employment tax. The challenge with that is this reasonable compensation clause that the IRS has out there. Now, if you are a sole owner of the business and a sole employee of the business, so I think probably at least a third of you guys in here are realtors, so almost all of you are going to fit into this category, you do not want to be an S corporation. The reason you don't, right here, is the IRS, and this is guidance that you can find. You probably can't see this here, but if you guys send me an email after, I'll happily share the slides with you so you'll be able to have this link. This is direct from the IRS's website. What they say is that if you are the only owner and the only employee, you need to take most of the profit as a wage. So if you're taking most of the profit as a wage, you're losing the vast majority of the benefit of being the S corporation. Because now if, for example, you made $100,000 in your profit before your wage came through, well, now if you're taking most of it, and I kind of define that because it's not actually defined anywhere, as about 70%. So $70,000 is what's going to be your wage, right? Well, when you do the math, and I've done it, do you trust me or I'll show it to you later, the savings that you're getting on the pass-through is not as much as it's costing you to now run a payroll. So you're going to be paying somebody to run a payroll, which is probably costing you at least $600 a year. You're going to be paying somebody like me probably to do an extra tax return for you, a corporate tax return, which can cost you, anywhere from $750 to $1,500 to get that tax return prepared. You're not getting as much benefit anymore as the self-employment tax side of things goes, and we'll talk about it towards the end when we're doing the tax side. There's also a new 20% deduction that's going through on your pass-through entity. So as a corporation, as a sole proprietor, when you take your tax information, you have a $100,000 profit, you're going to get a $20,000 deduction or 20%. Well, when you're this S corporation as a single owner and a single employee, that is going to be reduced to what passes through. So the $70,000 is your payroll. Your pass-through is now $30,000. So now you're only going to get a $6,000 tax deduction instead of the $20,000 had you not been there. So being an S corporation, there was a shot it might have been helpful to you before. This has just removed that. Now, this is very specific to being a sole owner and a sole employee. If you have multiple owners or multiple employees, S Corp could certainly be a way to go for you, right? And there's certainly analysis that we want to take a look at. Honestly, it could be better for one of the owners than another owner, so you kind of have to come together when you guys are making that decision, but there's certainly benefit for it with multiple owners and or multiple employees.
Can you change that at any time, like if you do start to have some growth with your company?
You can. I'm going to get to this here in a second for you, but that's the slide. We're going to talk about that in just a minute. So the other reason where you may want to be an S corporation is if you're not a service-based business and you're exceeding the threshold set forth where you can qualify for this QBI deduction, there may still be a benefit for you to go through, right? Because once you exceed, I think it's $157,000 or so single, or double that as married, you get into a whole much more complicated tax structure with this new change that came through. So I'm not going to go into the details of that right now, just kind of know that that exists, and if you get to that income level, you shouldn't be doing your taxes anyway, right? You should be having somebody like me or a CPA or somebody doing your taxes for you. So when does it make sense to be a C corporation? Well, international owners, so you're not allowed to be an S corporation if you have one or more non-US U.S. owners. If you have a lot of owners in there, right, an S Corp only limits you to 75 owners, which for the most of us here probably is okay, but just know that there is a limitation there. If you're having a lot of people coming into the corporation as owners, going in and out, that creates a lot of accounting challenges when you're not a C corporation. And then, of course, right, if your income levels are high enough to withstand going through the progressive tax system, so you're somewhere in the $500,000 plus profit range, and you're planning on leaving money in the corporation, that's kind of where that may be relevant for you to be a C. So outside of that, most other instances, being a single member LLC or a partnership, will be, and by partnership, an LLC partnership, a multi-member partnership through an LLC is going to be the better way to go. Yeah?
What about a series LLC?
So series LLC could be the same thing, right? Just depends on how many owners, right? So just kind of fit that into that same model that we're talking about. Yeah. Oh, yeah, sure.
How do we pay our Medicare and everything else with the single?
Yeah, so how do you pay your Medicare expenses, your Social Security expenses, those types of things, right?
Yeah.
So that's the self-employment tax component to it, right? So that 15.3%, that's what that money goes to, right? So when you're making your estimated tax payments, those 4 times throughout the year, a component of that is covering your self-employment tax, which is those types of things. So to your question, well, what do you do if you made a mistake or if you grew and you want to change, right? So starting kind of from the beginning, well, the mistake being, my opinion, the mistake, you haven't formed the business entity yet, so you basically just haven't done anything. So that's the simplest way to fix it, right? You could file your articles of organization with the Secretary of State. It's a relatively simple process. You could have somebody like me help you with that. You could have an attorney do it, right? Or you could certainly do it on your own. You would obtain a new EIN from the IRS, so you have an employer identification number, so you're not sharing your Social Security number now with everybody when you're sending out a 1099 or a W-2 or those types of things. If you have a professional license, a slight challenge, right? So for the realtors right here in the room, you also need to follow up with your licensing board. So with the division out here, you would actually have to change your license. So your license would be your name plus, in my example, LLC, right? So just something that make sure you do that. And you'd also provide whoever's paying you a new W-9 that has this new business employer identification number on there. So now they're paying your business rather than paying you. So next part, so you already formed your business entity. Maybe you selected it to be an S corporation already, and you're realizing that may not have been the best move for you. Maybe from some of the things I've said, or maybe you kind of already knew some of those things were coming. So if you're already an S corporation, you have to maintain it for 5 years. 5 years from the date of filing. So if you're inside of that 5-year time period, you either have to wait or you dissolve it and form a new entity. If you're outside of that 5-year time period, it's relatively easy. There's a letter that you would send to the IRS or some instructions that you would put to them to say, hey, you're changing this business entity, a few different things like that. But it's not an incredibly complicated thing as long as you're past the 5 years. But inside the 5 years, you're going to have to wait.
So if it's in the 5 years, you can dissolve it and start something new, or after the 5 years?
Well, you could always dissolve it anytime you want,
Okay,
but you just can't change the election. So you can't keep the business entity not being how you elected to change the tax status for 5 years. So if you filed initially, for example, as a single member LLC, by default, you're taxed as a sole proprietor, which in my examples for most people here is probably the better way to go. If you made an election when you form that single member LLC to be an S corporation, you have to either wait 5 years until that election lapses, where you can then revoke the election, or you could theoretically dissolve the business entity and start a new one.
Okay.
Let's see. And so now, if it turned out you should be an S corporation, right? Because there are good instances, right? Not so much when you're the only owner and only employee, but there's certainly instances where your business would benefit from being an S corporation. So if you did that, it's a relatively simple form. It's a 2553 that you file out there. and you send it in with the IRS, and they'll give you a letter. Well, now with the government shutdown, they're probably a little bit backed up right now, but usually in 1 to 3 months, you kind of get a letter back from them telling them that it's good to go. If you should have been a C corporation from a tax standpoint, you could still be that. You would just file the 8832 as the tax code for that. So high level, right? That's the topic for business entities. We're going to move into some accounting topics. Before I move into that, anybody have any more questions on business entities? Yeah.
For the LLC, is it okay if it's just a one member in the LLC?
Yes. So not every state, but certainly the state of Nevada, you can be a single member LLC. So when you file your articles of organization, when you only list one member, so the managing member effectively, that by default makes you a single member LLC, which is perfectly legal and fine in Nevada.
But if you practice in 2 states though, can you have it under the same LLC, or would it be blanketed?
You can
Two
have it under
different
the same
LLCs under
LLC, so
something
what you'd
else.
have to do, so if you're talking about Colorado, for example, right, so you'd form, likely better for you to form in Nevada, again, better question to ask an attorney, but from what I hear, most of the time, the Nevada LLC is one of the easiest, cheapest, and strongest forms of a business entity to have.
Okay.
Then when you would go to Colorado, you would file with the Secretary of State there to operate as a foreign business entity. So you'd have to file a form there, you'd pay some type of fee, and then you could have your same business out there.
Oh.
Of course, you could also just create a whole new entity, right, and run 2 separate businesses. Nothing other than maybe licensing board would stop you from doing that.
Okay.
Yeah.
Question, if you already formed your LLC, but you haven't filed taxes yet for the first year, so first year in operation.
Okay.
Does it default to an S or a C?
No.
Or you just choose that the first time you file, right? So if we met with someone like you, we would say we choose to be either an S or a C corporation?
Yeah, so actually, are you the only owner?
No, it's a partnership with me and my wife.
Okay, so as a partnership, you're by default a partnership.
Okay.
So you have 75 days from filing of your partnership to elect to be taxed as anything else.
Okay.
So presuming that time period is lapsed and you formed it in 2018, in 2018 you'll have to file your taxes on a 1065, a partnership tax return. If by March 15th of this year, it made sense to be a C or an S corporation or something else, you would have to file one of those 2 forms, either the 2553 or the 8832, and you could be electing to treat your taxes as one of those types of business entities.
Okay.
But your default, you're going to be a partnership.
Okay.
Well, that's it for us here today at CMD. Thanks for joining in. We appreciate you viewing. You can subscribe to our YouTube channel here to stay up to date every time we have a new post. In addition, here's our contact information. If you have any questions, feel free to shoot an email. Check us out on our website. You can follow us on Facebook, or you can follow our blog at blog.cmdcpa.com, where you can stay up to date on tax topics as we publish a newsletter every couple of days. Thanks, and look forward to seeing you next time.